Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Forgot to turn on my lights. It is Saturday, July 16th. I hope you are having an amazing day. This is an hour we do together each week where we talk about what is on your mind. You ask me questions, I do my best to give you my answer. Hopefully, you enjoy this time together. I do. It's really my opportunity to really hear from my followers, subscribers, all of that. Obviously, Sunday through Friday, I'm interviewing various experts, and we're talking about what kind of top of our mind, top of our business. But on Saturday, I get to hear from you. So I like Saturdays. I'm going to riff for a little while. As always, if you have a question, you want to say hello, feel free to leave a comment below. I will, as always, scroll to the top and recognize folks as they come in. So a couple of things to get started. I put out first this morning at 7 o'clock or 7:05 a.m. Pacific my thoughts about Wednesday's National Association of Realtors report. If you've been on my channel for the last month or so, you know I believe Wednesday, July 20th is a big day. It is going to be a day where trends are validated. Inventory is growing. Check. Transactions are falling. Check. Price appreciation is slowing. Check. We're probably going to hear about cancellations. We're probably going to hear about days on market. Everything is going to go the real estate slowdown way. If you're watching my channel and you look at the numbers, they're really not that scary, especially when you look at the context of 2019. That said, I believe the media, the talking heads, will take the trends, take rates of change, and they are going to continually hurt the housing market. I believe the housing market is already seeing transactions crash across the country 10, 15, 20, maybe even 25% month on month. Just wild falls. Not everywhere, by no means everywhere. But what will happen after Wednesday's report is more and more buyers will go, wow, I don't want to buy at the peak. I don't want to be the person who bought at the top. Buyers who are on the fence are going to get off the fence and say, no, thank you. At exactly the time that sellers say, oh my God, honey, it's the peak. Let's list, let's sell now. It's going to be a disaster. A mismatch of just listings. And are they wish pricing or real? Do they need to sell? Do they want to sell? Oh, it's going to be messy, messy, messy. But it's going to lead to the real estate slowdown. It is going to lead to opportunity. Opportunity is coming. Opportunity will be here for a while, quarters, years. No need to rush. No need to rush. Again, as investors, we don't care about higher rates, right? Frankly, I've said it and I believe it. You want to get this thing going? Let's take the 30-year money to 10%. You want to really break housing, Powell, let's get 30-year money to 10%. Let's get ARMs to 8%. That'll do it. But you and me as investors, we just put that value in our spreadsheet. If you're in my course, it's just a variable of your mortgage payment. And frankly, we got to do better deals. Oh, by the way, something that I think is going to be a ripple in all of this is rents. I am more convinced than ever that rents are going to bifurcate. I really do think multifamily, generally speaking, is in for a world of pain. If you were involved in a syndication, if you are a multifamily buyer, and you got a deal done in the last 6 to 9 months, and you got variable rate debt, you got bridge debt, you got a 1 or 2 year IO, I don't know how you come out of that. If you got a deal a year ago, 9 months ago, your interest rate was probably 4.25. But what is worse, your assumption was maybe 4.5, 4.75. It's going to be 6.5 or 7. You bought it with a cap rate of 5, hoping to do value add and increase NOI, and maybe you plan for a slight uptick. Maybe you plan to exit at 5.1, 5.2, or maybe even worse, you plan to exit at 4.5, 4.2. Oh, when you can get 10-year money at 3, 3.5, which I think is coming, cap rates are going up. And then the coup de grace, I think multifamily apartment owners have stupid rent assumptions, have stupid occupancy assumptions, and have stupid rent collection assumptions. I believe the apartment renter lives closer to the bone. I don't think that would shock anyone. More paycheck to paycheck. And given where gas and food and daycare and, just all those things that are must-dos, we're going to see really bad rent collections for apartment owners. On the flip side of that is housing, like single-family homes, like legit single-family homes. I suspect as affordability or unaffordability, depending on how you want to talk about it, gets worse, you're going to hear more and more folks go, you know what? I'm going to chill. I'm going to rent a home for a year or something. And again, the affordable rental is like a unicorn holding a 4-leaf clover. They're not out there a lot. I think rents for affordable stuff, the stuff that we talk about at one rental at a time, there's just the demand dwarfs supply. So, that kind of only ends one way. I think this week's going to be interesting. We talked about on our daily financial news the week ahead. This is the last week where we can get economic data that's bad, which means it's good, if you know what I mean. This is the week where if we get enough bad data, the Fed might hold off on a full 1% move. But if housing comes in hotter than expected, if manufacturing comes in hotter than expected, if housing start comes in hotter than expected, the Fed's going to have no choice. Full 100 basis point, full Bank of Canada. But, as if you follow my channel, you know that I believe that's what they should do. But I believe Jerome Powell is a communicator. And he is telling Wall Street what's coming, and Jerome Powell wants to deliver 3 quarters. We will see. We will see. So again, lots of stuff going on. I think the housing slowdown is real. I've been calling it for 6 months. I think prices, again, median home price across the country will not be negative this year. Year on year, it will slow down. It will be in the single digits. In this morning's video, I gave an estimate that the year-on-year increase in median home price will be 12.5%, down from 14.5%, but still double digits. I think real estate is slower than most people expect. So again, it's a big week. The summer, July specifically, July is usually kind of slow, right? Not this week. This week's important. Then we get Tesla and we get Netflix and we get Bank of America. We get American Express on Friday. It's just a big, big week. So again, folks, this is for you. We have 51 minutes or so left. Let's see who's with us today. Let's scroll to the top. And again, if you have a question, please ask it. I'd love to hear from you. Tamika, good morning. How are you? Ultimate Bargains. Jeffrey, how are you? Oh, Dion, how are you, buddy? Are you still in hell? Is it still 120 degrees where you are? Mandy, good morning. How are you? Better Home Rental, good morning. Roldan, good morning. Marco, good morning. Vatsal, hey, good morning. How are you? Romy, good morning. Pam, good morning. Chester, good morning. GPs under significant pressure and LPs might lose capital. Might. I think best case for limited partners in most cases. In most cases, you were probably sold a syndication Or, hey, you're going to get 15% IRR. You're going to get 6% a month or a quarter, however they pay out. I think best case for most LPs is you have dead money for a decade. They're not going to pay you. They just can't. There's no money. That's best case. Slightly worst case is you don't get paid and you have a small capital call. Hey, I need 10 grand. I need 10 grand from every investor to hold on. The better times are coming. Come on, help me out, help me out, help me out. That's called a capital call. Worst case, sorry, can't pay you. The bank called the loan because of DSCR, and we got to sell it. We got to fire sell it. And darn it, there's no buyers. Oh, but good news. You gave me 50 grand. I saved you. I got you 18 grand back. Sorry, that 32 grand you lost, write it off. Worst case, and I think there's worst cases coming. Sorry, we sold the building, no money left. You get nothing, but don't worry. We got our 2% management fee and our 2% finder's fee. Oh, well, you're rich. Don't worry about it. There's a former Bigger Pockets alum who had the balls to say, I only want to borrow from millionaires because if they lose 50 grand, they won't care. I'm sorry. That's not the attitude I want from people investing my money. Are you freaking kidding me? I would never give somebody $1 if that's the attitude they have. Oh, you're rich. It doesn't matter. I took a shot. Horrible, horrible, horrible message. And unfortunately, I believe a lot of GPs or general partners believe that. They're like, you didn't work for it. You didn't need it. Oh, yuck. So yeah, I think, Chester, there's a world of pain coming. I am already hearing from LPs because I've been very negative. I've heard from about 10, maybe 11 LPs in the last month that they've already not been paid. Their GPs have already stopped their monthly or quarterly payments. Damn, that's early. Wow. And this is going to go on for 18 or 24 months. Bad. When money rains down on fools, all of these wannabe syndicators, and they got rich. A lot of them got rich because they had great timing. Now they're going to lose a lot of people money and their reputations are going to be nothing. And I'm going to be sitting on the sidelines applauding because a lot of these guys are and ladies are just not good people. Just not good people. Sorry, I was a little ranty. I apologize. Sean, think the next Fed raise inverts 3-month and 10-year. So the next Fed rate is Wednesday next week. I think it's the 27th. I think it's next Wednesday. No, so two Wednesdays from now, the 27th. I don't know. The 3-month and 10-year, I think they're still a point apart. But hey, I have a smartphone, so let's just look it up. Let's not guess. One sec. Going to CNBC bonds. Where are we? So as of this morning, the 3-month is at 2.38, and the 10-year is at 292. No, I don't think it. I don't think the 3-month and 10-year invert. I think that might be September. I think in September. I think the September rate hike or I think, Sean, again, my total ass guess. I think it's the expectation of the September rate hike of half or 75 that inverts the 3-month and 10-year. I think the 3-year and 10-year get close. I mean, what's the gap today? The gap today is like 0.55, 0.56, 0.54, something like that. I think 5.4. Dude, I think it gets close. I think the yield curve's really, I think it's flat. But I tell you this much, Sean, if they raise 100 basis points, yes, it inverts. If they raise 75, no. How about that? I just gave myself a caveat. So if the Fed raises 100 basis points on the 27th, yes, the 3-month and 10-year invert. If they only raise at 75, no, it gets close but doesn't invert. That's what I'm thinking. Brian, you talk about the 20th being the first time that people en masse realize the market is changing. I think the media and the public are slow. Could it be the 20th of July plus 2 weeks or 30 days? Well, that's kind of my point, Brian. It doesn't just suddenly shift on the 20th. That's the date the data is real, not opinions. National Association of Realtors, or NAR, are a trusted source with decades of experience. That is the date that the data is solid. And then what transpires from there, Brian, is exactly what you're talking about. The next day, and the next day, and the next day, the media just hammers negative, 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 negative. And then buyers retreat first, sellers FOMO second. So yeah, I think we see a marginal change in a month, but it will be the 20th of July when everybody looks back at what happened. Everybody will point at that report. So when I talk about July 20th being the date, that's not the date, all the momentum. It's the apex. It's the first spark. It's the whatever you want to call it. So Brian, you and I see it the same way. The 20th is the spark that starts the fire that becomes a raging inferno days, weeks, a month later. That's what I think. Good morning, Prasanna. How are you? Mike House. Question. I'm watching to buy a new property as soon as I find a deal. Cool. With the house I'm living in now, I can turn it into a duplex for about 15 grand. I think it would bring in 500 more as a duplex. Thoughts? So there's a lot in that. Is it a legit duplex, or are you just doing it without code? Because if you're going to convert it to a duplex the legal way, 15 grand's not enough, I don't think. I think permits and utilities and extra meter and all of that stuff. So I'm just going to wild ass guess here that that's not a legal duplex. I'm just guessing. So you're going to do that for an extra $500. I suspect you are not adding costs in expenses. For example, if you're going to do a duplex the non-legal way, you're going to have to split utilities because you're going to be on 1 meter. That is a headache and a half. You're not going to understand that you probably have lawn care in a house. You don't have lawn care. That's the tenant responsibility. In a duplex, you might. So my experience with people that are looking to cut corners, and again, I'm just guessing based on the cost, that you're not assuming the right expenses. I think your expenses are going to be more than you think, and thus may not be a good deal. Not to mention higher insurance. A duplex is more expensive than a house. Turnover is higher in a duplex than a house. So I don't think it's as good as you think it is. But again, if you've done the work and you know the numbers, you do you. I just have experience with stuff like this, and your numbers don't feel right to me, my opinion. Good morning, Paul. How are you? Janet, good morning. Izzy Real, good morning. Janet, tell us your thoughts about the Miami market. It's getting very strong. The California exodus is getting very strong. Thank you to King Newsom. King Newsom. Yeah. King Newsom might be President Newsom. Man, or is he still a king? I don't know. Anyways, still a king probably. I know nothing about Florida or Miami. I've never looked at it. All I read is a lot of articles in Florida and Miami as a frequent topic. I think I've said this before, and I think Florida will likely be the last market, if ever, to soften. I think it slows down. I mean, I don't think you continue at 30%. I mean, that's just not natural. I hear there's a lot of building going on, so eventually that will catch up. But right now, you are in this storm of migration. What people don't understand about migration in real estate is it takes a second to decide to move. Once you decide to leave California and you say, I'm going to Miami, that's a moment in time. But it takes a lot more than a moment to build another residence. Florida, Miami specifically, I don't know what the numbers are, but I hear 1,000 people a day, or 1,000 people a week, or whatever that is, you were not. Florida and Miami was not ready. Florida and Miami was used to, hey, the rich New Yorkers retiring and moving down. You were not ready for work from home. You were not ready for just a massive inflow in an 18-month period. So again, on a migration basis, rent basis, I mean, it's nuts. It can't last forever. Trees don't grow to the heavens. It will eventually even out, but I don't know when. Your buy box in Miami or Florida has got to be just wild. I don't know what an average yield is in Miami, but it's probably not much. Yeah, I mean, that's about as comfortable as I could say. It's got to be a wild market to watch. Hey, Casey, how are you? Jerneal, have you used Rachel Davis at Constant Close before? Nope, no idea who she is. She's Pace Morby's transaction coordinator who handles sub-2 seller financing and contract closing. Yeah, I could reach out to her. No, I've never used her. I never even heard the name before, I don't think. I don't know. Pace or Laura or Cody may have mentioned her. I don't know. I haven't used. I ignore bigger pockets. Yeah, that's a comment from Ultimate Bargains or Jeffrey. It's bigger pockets, in my opinion. One guy's crazy opinions turned into a publishing house. A lot of the early people are using their reputation to raise money. I think that ends badly. I suspect bigger pockets is pushing syndication and Burr and Airbnb to the detriment of the average viewer, because it helps their hosts sell books and courses and stuff. I think bigger pockets has lost their way. I was a very early bigger pockets guest, right? Josh Jorkin interviewed me in his basement. You could still find that video with me and my fat ass cheeks before I found CrossFit. I was a featured blogger before Brandon Turner showed up. Brandon Turner and I don't get along. The reason I probably won't be invited back to bigger pockets is because I tell everybody who asks that I don't like Brandon Turner. I think he's an arrogant little prick. So bigger pockets will never bring me on because, Brandon Turner, the beard, is some kind of mythical creature that, everybody's supposed to worship and love. And I can't stand it. I just can't stand the guy. Ugh. It just grades on me. Anyways, that's another rant for you. I'm sure that one will get me in trouble someday. Persona. Just for fun, what happens to the housing market inventory if 30-year fixed rate is 5% and ARMs are 4 end of 2022? Not much. Stronger than people think. Yeah, 30-year money's 5. That would be down from today, just so we're on the same page, Persona. I think the housing market's fine at 5%, 30-year money, 4% ARMs. I think in a year, people love 5%. Right now, they're kind of still in that weird time where, oh my God, I can't get 3. They'll get over it. People have short memories. I think the housing market stays relatively healthy at 5%. So, Jeff, say we have another financial crisis. Do you think the Fed will come in printing even with inflation? Will they pick inflation over institutional default? Well, that kind of depends on where the financial crisis is. I think we will have worldwide financial crisis. I think what we've seen in Sri Lanka, Argentina, Turkey, probably somewhere in the Eurozone. There's a lot of currencies in debt that are going to get hurt because of the strong dollar. A lot of that's not being talked about. I see it coming. Debt defaults and things of that nature. This is not going to be the great financial crisis where the main asset of Americans' housing falls 50%. It's not coming. It's just not. Will there be pain? Absolutely. I'll answer the question this way because I think it's more likely. Jeff. Let's say, what is the market today? Let's look at the stock market today. One sec. Let's go back to CNBC. What is the market today? So I think the S&P closed at 30, let's call it 3,900. Let's say earnings come out, inflation takes hold, rates go up, and the S&P falls to 2,500. This is not my call. This is not what I'm saying. I'm just saying, what if? I think this is the first time, Jeff, in 40 years that the Fed doesn't bail out Wall Street. The Fed can bail out Wall Street when inflation is under 2. They can't bail out Wall Street when inflation's 9.1. So I do not believe the Fed will come to bail out Wall Street. If S&P 500 goes to 1,500, that might be a problem, because then unemployment's like 12% or something nasty. But I don't think, again, I'm not calling 2,500, but I don't think 2,500 is low enough to get the Fed to say, hey, that's more important than inflation. So that's what I think. I don't think that's a financial crisis by any means. I mean, that turns 401ks into 201ks or maybe even 101ks. Negative wealth effect. It's bad. It hurts. We have a recession. We probably lose 3, 4, 5% off GDP. But that's what has to happen. It has to happen. And I don't think the Fed is in a position. I don't think the Fed bails out Wall Street. I think the Fed realizes that Main Street. I mean, you guys, the poor and middle class, which makes up what? 70% of our population? 75? I don't know what it makes up. I'm just guessing. They can't stand 9% CPI. It can't. So I think for the first time in my adult life, the Fed is going to pick Main Street over Wall Street. And this is where I disagree with my stock guys, right? Dan, who comes with me on Sundays, and Taylor on Mondays. I believe both of those guys believe the Fed will bail out Wall Street. And I fundamentally don't believe this time. Now, I could absolutely be wrong. And if Jerome Powell or the next Jerome Powell comes in and bails out Wall Street instead of Main Street, weak. Yeah. So that's what I think. And again, I'm wrong all the time. I noticed a lot of syndicators started to do funds instead. Think this opens up more risk. Their bad properties might take down their good ones. So I've seen that a little bit. Again, what I have seen is that's generally the top 10% of syndicators are now doing funds. The majority of syndicators, and where I see most of the pain, aren't doing funds. They're still doing single asset raises. Yeah, I don't know. It's certainly concerning, but I think it's still pretty nascent or small. I still think the syndicators who are doing bridge debt, bad assumptions, just wipe people out. Single asset stuff, yeah. Dear Michael, could you please see my above? Did I miss something? Oh, let's go see. Oh, I did. Miami market, I already did that. I think I did. Unless you put something else that I didn't see. 50 grand is a lot of money to anyone. Not sure where that came from, but okay. Morning, Michael, or I'm sorry, Alan, good morning. How are you? Renee, good morning. I think they should pass that bill to tax Californians as they leave. It's not fair that they get to leave and mess up other good states. Okay. New Hampshire will be the last market to turn. Dude, so the Lumberjack and I did a video on his channel. If you haven't followed or subscribed to the Lumberjack Landlord, you're missing out. He puts out amazing stuff. His review of products is like, gold. You should follow him immediately. We just did a review of the latest numbers June for his market. He's not kidding. The New Hampshire market might fall last. It's going to be a race between Florida and New Hampshire. And guess what both of those markets have in common? No state income tax. I'm just saying. Good morning. Getting pre-approved in Phoenix area right now. Do you suggest buying right away or holding on to pre-approved and watching the market a little longer? Thank you. Sarah, my answer is the same for everyone looking to buy. Get your buy box. Only buy great deals. No reason to rush. Learn your market. Learn your buy box. Find a great deal. Find a motivated seller. Don't pay list price. Get closing costs paid for. Get mortgage rate buy down. Use this to your advantage. Please don't believe if you are working with a realtor that says, Sarah, you have to overpay or shoot, you have to offer list, run away, get a new one. I believe I had a second conversation about the Phoenix market on Thursday, I think, with John Wake. He has some very scary data on Phoenix. So my answer is the same for everyone. Don't know your market, but I know how to figure it out. Get a buy box, look at it every day. Only write great offers. Don't write list price. Get closing costs paid for. Get mortgage rate pay down. Enjoy life. Have some fun. Alan, hi, Michael. How would you calculate vacancy in a duplex? I use historical averages. I'm lucky enough to be doing this for 20 years. My vacancies in houses today are hours, if not days. Duplexes connected, I don't know, for me, less than 5% today. They've been as high as 10%. But affordable rentals in my market of Fresno, California are like unicorns holding four-leaf clovers. They're not out there, and that's where I play. I do not think I've had a vacancy for more than 3 days in 5 years. Kind of good. Seriously, I have not had a vacancy that lasted more than 3 days for 5 years. Again, Alan, I don't know your market. How bad do you think the fear and hysteria will become? What indicators will you be looking for? I think it'll become pretty bad. I think it builds on itself. You are going to look at cancellations going up. You are going to look at transactions falling. You're going to look at people renting, signing new leases. Rental demand will likely go up. On the other end, you're going to see you will see listings explode. And the YouTube idiots are going to go bananas. Get ready for the YouTube channels of the world to say things like, oh my God, inventory's up 50% in a month. What? It's technically going to be true. Unfortunately, as if you watch my channel, you will know that a good portion of that is wish pricing. Want to sell versus need to sell. What you and I are going to have to follow, Brian, is how many of those listings expire or are canceled in 60 days. And we are not going to know. Real estate is so much slower than people want. You want it all to crash and crumble and deteriorate this month, next month. And you are all watching channels that talk that way. It doesn't happen. It doesn't happen that way. So I think the hysteria is bad. It will only take a moment for buyers to disappear. Sellers will come out of nowhere, and we won't know for 30 or 60 days. Because again, you get 1,000 listings. Listings go up. Days on market go up. Price cuts go up. And then after 30, 45, 60 days, cancel, expired. It's going to be a mess. Just a total mess. Mike, Dion's drop-in shows you need your studio to be set up for face-to-face live streams. I agree. It needs to be set up for that. I am not set up for that. That was the first visitor I've had at my studio. So yes, I agree. You're right. Someday. Yep. I had the same experience when I met Brandon. Yeah, he's an arrogant little prick. Yeah. Yeah, I've heard about what Brandon did. Yeah, Brandon wants to do capital raises and wants to lose other people's money and destroy his reputation. That's on him. Yeah. I've interviewed David Green. Yeah, I don't know Rob. Um, David Green is obviously Mr. Burr, Mr. Real Estate Broker, Mr. I think he sells loans too. I don't know that for sure, though. I could be wrong. Bitcoin Man says Florida will not crash. I think most of the country will not crash. So, yep. Vegas will implode. Well, I don't know that that's true. Well, it all depends on what you mean by implode. Again, Brian Lebo and I are buddies, right? Brian Lebo has been out in Vegas for a while. He and I talk, or at least text a couple times a week. I got a note from Brian yesterday, as a matter of fact. What did he say? See, I really do have friends. It's kind of cool. Brian Lebo, here we go. So he sent me inventory levels for the week. Hold on, I'm pulling them up. Inventory levels for July 13th. Wow, 6,400. They increased 533 in a week, or 9%. July 6th was 5,867. But again, we have to remember that Vegas, as of today, very different than Phoenix. I actually, again, Bitcoin Man, if I had to guess, this actually would be a fun guess. I'll put anybody want to take this bet? I'll bet $1. On December 31st of 2023. So what is that? 16 months, 17 months? I believe that Phoenix, on a percentage basis, will have a greater fall median home price than Vegas. And I believe that's based on my conversation with John, Wake, and Brian. John Wake clearly is telling us that inventory in Phoenix is skewed to the low end. That's not normal. That's not happening in Vegas. The median home price in Vegas, I forget, is $485 or something. Right now, the inventory, it could change, but right now, inventory is skewed to the higher end. It'll be a problem, but when you look at the median home price in Vegas, December of 2023 compared to Phoenix, it would not shock me that Phoenix has a larger negative number than Vegas. It's interesting. Methinks Turner Open Door Capital, he's GP surprised by that one, is going to take quite a haircut soon, as he will come back hat in hand. Couldn't happen to a nicer guy. How about that? He owns 1,400 units outside of that himself. Yeah. I don't know if that's true. I hear lots of people quote numbers like that, and they turn out to be total and not his portion, but I don't know. It probably wouldn't shock me, given how many books he sells, that he might have that. I don't know. He might. A lot of his stuff, though, I think, is mobile homes. Not that that's bad or good, but I mean, it's different cash flow, different profiles. Don't know that for sure. I don't know. I guess I shouldn't air my personal grievances. He just drove me away from Bigger Pockets, and I hold a grudge. Maybe he's a good guy. I don't know. I haven't talked to him in a decade. Man, maybe more than that. Maybe, oh my God, maybe it's been 14 years. So maybe I just have bad personal experience. I haven't talked to the guy in 14 years. Maybe he's okay. I don't know. Yeah, but anyways, leave it alone. Walk away. Any thoughts on the number or percentage of people that moved during COVID due to work from home that will end up moving back to their previous location? What are you hearing from the tech sector? So based on your question, Brian, I'm going to say that it's lower than you expect. I think there's a lot of people that think that a natural boomerang is going to happen. Oh, I sell from LA. I moved to Boise. I'm going back to LA. Hence your question, move back home or move back previous location. I actually think, Brian, it's going to be more of a hopscotch versus a boomerang, right? A boomerang comes back. Hopscotch is you jump here and then you jump there. I think there's a lot of people that went from LA to Boise that will go Boise to Phoenix or Boise to Texas or Boise to Florida. Unfortunately, once you leave California, it is very expensive to come back. So to your question, I think it's going to be a lot less than you expect. But that said, I don't think people that move to one place won't move again. I think that will be more than you expect, if that makes sense. Yeah. Oh yeah, let's get to 50,000 ASAP. Yeah, like, subscribe, comment. I would appreciate that. Dion wants to spend my 10 grand as fast as he can. What do you think about the Texas market? I would think Texas would be somewhat resilient due to the state likely being the fastest growing in terms of population. I think that's very true. Again, it's a migration business. Texas does have, it's easier to build out there. I think Texas will be very interesting because of property taxes. I have heard from now hundreds of Texas investors, hundreds, who bought in Texas over the last 5 to 8 years, who had cash flow properties that are now alligators. Texas is no joke when it comes to yearly property resets. So, if you were buying in Texas and you cash flowed 300 and now you're negative 100, rule number one, no alligators. Can be painful. But yeah, I think Texas, again, no state income tax, a lot of migration from tech. I think California is in trouble, kind of around all of this. So I think Texas will be flatter than people expect. I don't think it goes down. I'm not calling it an epic crash or anything like that. I think there's a YouTuber out there that thinks Austin's going to fall 30%. I think he's an idiot. I don't know why people give opinions on markets when they look at one or two pretty charts, but whatever. I think Texas is more resilient. I think Austin, of all the markets, is most at risk, but I don't see how it falls. I don't know how Austin falls 30%. You have more jobs, higher wages coming. You have more migration. I don't see it. But again, I haven't looked at the Texas markets. I evaluated San Antonio, Austin, and Dallas like 15 years ago, but never pulled the trigger. Good morning, Abdul. How are you? Alan, good morning. How are you? Thank you for answering my question on the duplex. You pointed out some things I had not thought about. I may just leave it as a single house rental. Again, I just took some wild ass guesses. Hit the like button. Cool. Casey, Mike, what are your thoughts on Alabama? We haven't seen any indication that transactions are falling and rents seem to be stabilizing. Don't know anything about it. I have some good friends in Alabama, Huntsville specifically. They love it there. I think somebody like 2 years ago said, if you had to pick one market, not Fresno, to invest in, I said Huntsville. I've never looked at Alabama, so I don't know the yield or ROIs. I think anything in the Southeast is more resilient. I believe Alabama is much cheaper than Florida. I believe Alabama, specifically Huntsville, has more PhDs than most people expect. I think there's a lot more jobs in Alabama than people expect. It's a market to research. I've never looked at it in detail. PropStream now includes MLS sold and failed. Yeah, that's great. PropStream has been on my channel. They gave a link to anybody who follows ORAT for a free week trial and discount. I think it's in my show notes. If not, send me a comment. I'll send you the link. Might as well use it. Yeah, my team's using PropStream, right? PropStream, you guys have probably seen the best marketing piece to date. I use PropStream to generate my list. I keep telling you, I do this stuff. I'm not just some poser. I'm spending almost $1,000 a month marketing, looking for duplexes through quads for the 50, 40, 10. It's going to take some time, but I'm going to get some. U.S. market is going to crash hard, says Dave. So many properties that require more work than worth. Only invest in business-friendly or unique properties like Vegas, SoCal, Coastline. Oh. Have fun, Dave. Linda, morning. Chester, free, but not today. That's funny. Is there, if there is a market that is, that, what? 2000 when 30, 40%. I don't get it. So if there is a market that from 2019 to 21 went up, I'm guessing you're saying went up 30 to 40%. What is the fundamental and long run makes this stable market? What is the difference? Well, I mean, there's lots of things. There's almost an unlimited number of things. I'm not saying every market that went up 30 to 40% in 2 years is healthy. That's not what I'm saying. But there could be lots of things that make a 30 to 40% rise healthy. One, they could have been held down for years. You don't know. I don't know. Maybe 2016 to 19 were slow. Who knows? Maybe you've added 25% more people to the population. That'll do it. Even if it's 10% more, that'll do it. Again, I don't know why people, man, this freaking Nick guy gets everybody to think about prices. If you haven't looked at my 52-year spreadsheet and realized that housing is a payment game, you are not paying attention. Housing in 2020 and 21 were the second and third best year to ever buy a home. Second and third best year ever to buy a home. Because you could have locked in 30-year fixed rate money. You could be in a house for less than rent for the next 30 years. The people that won the 1970s bought a home in 1970 or 1971 and held on. The same thing is going to happen this decade, and I told everyone that same thing. 2020 and 2021 could not be a housing crash because it was the best time in your adult life to buy a home. And all you got to do is stay in the home, pay off the mortgage, and laugh your ass. There are people that bought homes in 2020 that have 30-year money cheaper than the federal government. I don't know if you guys realize this, but the federal government has to borrow 10-year money at 2.9%. There are people with 30-year money at 2.6. You borrowed money cheaper than the federal government. How do you like me now? That is healthy. Prices should have gone up. But yet there were idiots calling for a crash in 2020 and 2021 because it was too expensive and the chart was up here and it's higher than over here. No shit, you dumbass. Interest rates are 2.6 and they were 6.5 last time. Your payment here is 30% below here. Man, this people nick of time got to just stop watching stuff like that. It's just, there are people that listen to stuff like that that lost out on lifetime wealth. You could have bought your dream home, had a 2.6% rate, lower than the federal government for 30 years, and let inflation be your friend. If you borrow at 2.6 and the CPI is at 9, you have a negative interest rate of 6.5. Why is that bad? I don't know. Sorry, Santi, that I got a little ranty. I apologize. That was not aimed at you. That was aimed at people that like Nick of Time and all of that stuff. That was not aimed at you. Is the Northeast slow to change? I'm from Philadelphia. I'm seeing a lot of houses pop up, but not much change in price. No idea. No idea. I've never looked at a Northeast market. The closest I've come to is when the lumberjack shows me New Hampshire. I have no idea. No idea. No idea. Sorry, no idea. The only two things I saw was interest rates went down to 3%, cool, and work from home push changes. These two things are only temporary. I disagree. I believe work from home is, it certainly won't be the same percentage, but I believe there's a lot of migration that's not temporary. But again, I'm wrong all the time. Uh, don't know who, never seen the movie The Super. So I'm assuming it's a movie. Maybe it's a show. No idea. No idea. Don't know who that is. I know who Joe Pesci is, but I don't know that movie. Sub 3 day vacancy in 5 years for me too. Lots of units having zero turnover. Yeah. Yep. Uh yeah, no gators. Yeah, no alligators. Or you could say no crocodiles. It just doesn't have the same ring. No alligators, no crocodiles. I can spell alligators. I can't spell crocodile. Yeah. I'm a horrible speller. I work in tech. Have a ton of friends in tech. Most are not going back to LA, New York, or San Francisco. I will never go back. I have lived here for 50 years. My entire network is tech and crypto people. So, yeah, I think there's a lot of people that feel the same way. All right, bye bye. Block. Hide user from content. You get one stupid question and then I block you. Thoughts on Los Angeles County, folks? I don't know these markets. I am not some idiot who sits in a basement that's going to tell you about your market. Go get your buy box, do the work, find a great deal, move on. I don't know your market. I don't know it. I don't know Huntsville. I don't know LA. I don't know Miami. I don't know Texas. I don't know. I don't know. I don't know. If you want some YouTuber that you pay $5 to give you a stupid opinion, that's a different channel. That's not me. Good morning, Sean and Wendy. How are you? Okay. Hi, JT. Shout out Lumberjack Landlord. I don't know Tennessee. Is there a sub 2 portion being added to your course? Yeah. Ty is adding stuff like that, and I am in. So first off, there is already creative financing in there. I don't know why people haven't looked at it. Ryan Nickel has already created amazing sub 2 content. It's already there. Ty will be creating new stuff, and I'm in communication with Pace Morby. Pace is agreed, but he's very busy. He's been agreeing for 6 months, so I don't know if that's just him saying yes to a friend, but it never comes. I don't know, but we shall see. Robert, you sound like a brainlet when you don't accept charts or data when looking into the forecast of real estate market. All you use is your arrogant opinion as facts. Well, Robert, people are asking me about the future, and I don't I don't have a time machine. So I'm not sure what you want me to do. Um, am I confident in my opinions? Sure. You see it as arrogant? Fine. Um, I don't mind charts. I'm a data geek. I talk about this stuff all the time, Robert. Uh, as a trained economist, a degree in everything, Robert. I know that the complex picture of the economy is full of dozens of charts. I have a problem with idiots that think you can explain a housing market or the economy in a single chart, Robert. So, if you want to have an intelligent conversation about multifaceted variables across a complex economy, I'm down. If you want to show multi-threaded in a complex video in 5, 10, 15 charts, let's go. I think it is suicide to think you can talk about a housing market or our economy in a single chart. They don't exist. It doesn't exist. If you zoom in on a complex, multi-threaded painting and point at one color, sure, it's blue. Maybe it's baby blue. But you can't tell me about the Monet or the Picasso by looking at baby blue. So, Robert, you think I'm arrogant? Maybe, probably. I've been doing this every day for 30 years. I actually have a degree in this stuff. You don't like it? Okay, I get it. I take criticism, I take feedback. But let's be very clear. There are some posers out there who look at one chart and make grandiose statements. And as we have seen in the last 2 years, that mindset has crushed people. So I have a problem with that. And maybe I'm too ranty and maybe I shouldn't care, but I don't like seeing people get hurt by idiots. So, sorry, you don't like that. Have a wonderful day, Robert. I hope you enjoy your Saturday. I hope you have a great weekend. Hope you have a wonderful day. All right, folks, I'm going to call it here. I do need to get ready for our deep dive on house hacking with Spencer and Todd. I again confirm with them. We are going to go do that right now. Folks, have a wonderful day. Take care of yourself. Bye-bye.